Hey everybody, Marcel Ernie Racing News. Today we're bringing you Kitco news for those familiar with they talk about gold and stocks and investments and Bitcoin, and they're talking about Justin Trudeau and his new capital gains tax as well in comparison to Biden's new capital gains tax. Let's take a listen.
I wonder how much of this is just political. It seems like Justin Trudeau's looking for a vote everywhere he can kind of grab it these days, especially in a time where we have so much debt. This seems to be compounded with this. Let's go back to that small business for a second because, the stat is as of 2022, there were 1.21 million total businesses in Canada, 1.19 million or 97.9%, almost 98% were small businesses. That's a very substantial role in Canada's economy. So I'm a little bit curious here. What do we got to lose? I mean, is this going to be job creations, economic growth? We have a lot of people in the tech industry and in innovative industries coming out today and saying, this is stifling us.
It's absolutely stifling. And then now let's look at existing business owners. For business owners right now that are sitting there looking at these changes in the tax code, they're saying, wow, so if I successfully sell my business, if I grow my business to $10 million and I sell it, I am now paying a third effectively in taxes. Is there another jurisdiction that I should move to that has a more favorable tax regime in which I can maintain more, where I can keep more of my wealth upon exit? And then there are the entrepreneurs sitting on the sidelines that are saying, I'm thinking about starting a business, but I have to weigh these factors into consideration in terms of what is the risk reward. I am aware of the amount of risk I am taking. I'm aware of how much pain I can put myself through this process to try to create a successful business. But I don't know if I want to do that anymore. Yeah. So in terms of when you use the word stifling, you're talking about, making it much more difficult for entrepreneurs to pull that trigger and start a business or even stay in the country.
Mm-hmm. Well, talk to me a little bit about this investment climate and maybe some capital flight. I mean, we already have issues with our capital markets in terms of liquidity, even the amount of eyeballs. If we think about foreign investments, often we talk to business leaders and they already look to Canada as being overregulated and they're already unsure of bringing their business here. Is this going to impact future business here?
It is because, not so much on foreign investors, because a lot of foreign investors are taxed based on their own jurisdiction. But if you look at domestic investors, so you're looking at private equity, venture capital, even high net worth individuals that like to invest in small businesses, they face capital gains upon making an exit. A lot of them invest in small private businesses and realizing that 9 out of 10 of their investments, they could end up seeing nothing back. These 9 out of 10 investments are going to end up failing. And
9 out of 10 investments, that's 90%.
Therefore, they're going to have to write those investments down to zero. So they want to be rewarded for the few that do pick up, for the few that actually make successful exits. So in their situation as well, they're looking at this and going, well, I'm retaining a lot less reward for the risk I am taking for writing these checks and making these investments. So I'm not sure if I want to take these risks anymore.
Okay, so now they're going to walk you through the percentages of what actually changed, what's going on with Biden and what's going on with Trudeau.
A top rate of 44.6% for individuals with a taxable income over $1 million. This marking one of the highest rates since the 1920s. Meanwhile, in Canada, a similar contentious proposal under Prime Minister Justin Trudeau could see capital gain taxes increase up to 67% on gains over $250,000, which has many people concerned.
Holy crap, what a difference between the US and Canada. It's already was bad with Canada at 50% and over 250. Now it's 66%, but go back to the States, it's not even as close to as bad or seems to be as bad.
Now, Biden still has to pass this bill through an angry Congress, with many publicly against the tax increase. But in Canada, Prime Minister Trudeau's Liberal Party holds a minority government, meaning that they could pass this proposed capital gains tax increase with the support from the NDP party.
Yeah, he means he has a majority with this fake-ass coalition. I mean, it's so stupid. There should not be allowed to do coalitions.
And have given a deadline of June 25th for this to take effect. Now, there's also a critical difference between the two proposals, which we will break down. While the U.S. proposal targets a specific income group, Canada's broader approach could affect a wider segment of the population. Doctors and entrepreneurs are already speaking out. Now, critics argue that such increase could stifle our economy, small businesses, and our innovation, suggesting that these are not just taxes on the rich, but measures that could have broader economic repercussions for everyone. And joining us to discuss these developments is Daryl Ching. He's a chartered financial analyst.
Okay, so let's break it down, but he's going to break it down for the U.S. first.
Me here. First, let's start with the U.S. President Biden's proposing to align the capital gains tax with the highest income bracket at 44.6% for those earning $1 million. Explain the U.S. proposal to us and what shifts we might see in strategies here for those earners.
Well, there's a small silver lining to that announcement because it's only on the short-term capital gains tax. So it will certainly affect people who do trading on a stock portfolio, who hold investments for less than a year. And then they will be, the tax rate going from 37 to 44 is somewhat substantial. Now, the 25% on unrealized gains is a much bigger issue because what that means is even if you don't sell your investment in the short term and you still hold on to it, but you have an unrealized gain, meaning the market value has gone up by a certain amount, you can still get taxed on it even though you haven't sold the asset yet. So I would say that component is more substantial.
Yeah, talk to me a little bit more about this, though, Daryl. Let's break down that, this unrealized. It's
going to lead to liquidity issues as well because, typically if you have a stock portfolio that is a sit and hold strategy where you hold a bunch of stocks but you don't sell, you typically don't have to pay capital gains. You only generally have to pay capital gains when you sell your stocks or sell your assets. In this case, you can simply you'll have to pay even with any monetary increase in value on your portfolio. So this will be a considerable shift. When you talk about the value in terms of like $100 million households, you're looking at probably a range of 25% increase in tax payments above and beyond what people would have expected to pay initially in terms of capital gains. So that is quite substantial.
25% increase for that scenario in the USA.
Yeah, let's compare the U.S. proposal to Canada's for a moment, just to give a little bit of context. Canada's increase at 67% on capital gains over 250. So I'm going to try and break this down, then we'll go to you. Bear with me. Previously in Canada, the tax system offered a break where only half of your capital gains were taxed. The rest was yours to keep. Now, the new budget slashes this break dramatically, right? Now, you'll only keep 1/3 of your gains tax-free. The other 2/3, they're grabbing it back?
Yeah, so let me break it down in a different way. Mm-hmm. Initially, the proposal was that Canada, with 50% of your capital gains was taxable at your personal income tax rate. And when you're looking at entrepreneurs selling businesses, we're talking about millions of dollars in terms of the sale. The highest income tax bracket in Canada is just north of 50%, no matter what province you're in. So if you go 50% times 50%, effectively, your effective tax rate was 25% on capital gains, all said and done. Now they're saying that with the new proposal, the Canadian government deems 2/3 of your capital gains to be taxable. So if you take 2/3 times 50%, you're now looking at 33%. So effectively, the effective tax rate has gone from 25% to 33%. To put things into perspective, the long-term capital gains tax rate in the U.S. at the highest level is 20%. And if you hit certain income levels, there may be a 3.8% surplus. So you're at 23.8. So prior to this announcement, Canada and the U.S. were pretty close. There was 23.8% in the U.S. versus 25% in Canada. Canada is now shot up to 33%. So effectively, you are now paying 10% more on capital gains in Canada than you are in the U.S. on a long-term investment. And that could be real estate. That could be a business that you started and held for 10 years and then sold. And if you're talking about a $5 million sale, that in itself could mean an additional payment of $500,000 in taxes, which is substantial in Canada.
Okay, so it just keeps getting worse and worse and worse with Trudeau. Like, it just never ends. It's almost like every month or every week there's something new, right, Doctor? It just never ends with Trudeau making life hard for Canadians, making life harsh and hard and expensive, and Now 1 in 10 Torontonians, 1 in 10 people in Toronto now eating from the food bank. Homelessness it's pretty much gone up 400-500% in the last 3 years, in my personal opinion. Theft has gone up 500% in the last few years, in my personal opinion, in my personal experience, where I was robbed or attempted robbery upon me in the last 26 months 6 times. Everything that I want to buy, from say RVs to expedition vehicles to food to items, just like whether it's maybe a video game or a couch or a car, they have all almost doubled, and in some cases have more than doubled. I mean, and then obviously food, everything in the food has just been, it's been 25 to 50 to 75% increase, from those berries to the steak to items like vitamins to creatine to dishes to Christmas stuff to TVs. Everything, our purchasing power has gone to shit. What do you guys think? Write in the comments below. What have you noticed with your purchasing power? What do you think about Canada's capital gains tax being introduced here in June? What do you think about the USA's new increase and Canada being the worst of all? Terrible place to live going forward. Ernie Racing, over and out.